Um, yeah. So I don't know. The dead cat bounce. That sounds about right to me. I mean, it basically means just that, um, the market got torched for a while, and then a dead cat bounce just basically means like it's gonna have a reversion to the mean. Basically, like it's just gets beat up so much it's gonna bounce one day and then or for a couple weeks and then head back lower. But I don't know.
What's up, Firsty?
What's up, guys? How you doing?
Nice. Doing well,
Yo.
doing well.
Yeah.
Alrighty. Well, let's get started. I have a lot of things I want to talk about. You guys all sound good. Your mics sound good. Again, thanks for coming out and taking time. Unbreakable Pod number 3. Group of longtime friends, family members. We share ideas, diverse set of fields and occupations. So create somewhat of a hive mind. I like it. Anyways, my first question is for everybody. I just want to start. The last few days, the market has been like. So someone plays with the gecko at least.
Oh yeah, she always wants to get at that gecko. That's why she jumps on top of my chair sometimes.
Sometimes. Anyways, the last few days have been pretty green in both, the regular stock market and even crypto, with a specific pump that seemed to come after like jobs data came out on Friday. And my question is, do you think this is a real turnaround? Are we turning the corner? Or is this what you call a dead cat bounce? No pun intended. Is this a dead cat bounce? And just an opportunity for, bigger funds or other people to get out of the market at higher prices while retail usually gets fucked.
Do you want to explain what a dead cat bounce is? Since I've never heard that before.
Yeah, I guess I've never even really looked up the definition. I've just heard it in conversation a bunch, and it essentially just means like a small little relief rally that's usually followed by another drop in prices. It's usually like not a real turnaround in the market, not a real long term, not turnaround, and it usually precedes like another crash or correction, if you will. And I want to hear Jonathan's perspective here first.
All right. Well, dead cat bounce. That's just like.
Oops.
Oh no!
See you later.
He kicked me off the show for a second. Yeah. So I don't know. The dead cat bounce. That sounds about right to me. I mean, it basically means just that. The market got torched for a while, and then a dead cat bounce just basically means like it's gonna have a reversion to the mean. Basically, like it's just gets beat up so much it's gonna bounce one day and then or for a couple weeks and then head back lower. But I don't know. I think the market is gonna continue to struggle this year.
So you think it's not real?
No, I don't. I mean, it's real. I mean, the stocks are up, but will it last? I don't think so. I just don't know. I don't know what positive catalysts are going to drive the market higher. I mean, I think oil stocks can do really well because the price of oil is probably going to go higher this year. And companies with pricing power should do well that actually, are selling integral parts to industries. But tech stocks that people were betting on growth and things like that, I think are just going to struggle this year. I mean, it's probably a good time to buy them if you haven't owned them before and start buying a little bit of it. But I wouldn't be surprised. Like, don't go into it, being surprised if things get cheaper from here.
Catch those falling knives.
Yeah, just a little bit at a time. You don't want to get too crazy, but
Mhm.
yeah, you should, especially if you're a young investor, I think you should
What if you're
start
35?
start adding to some of your tech. But there's definitely more room for the market to get cheaper. I think if you look at the PE of just like the S&P right now versus historical PE, it's still expensive, even though we've come down a lot. Um, so yeah, but I mean, interest rates are still low. I mean, they've been coming up, but historically they're still low. Um, so there's a lot of things working for the economy still. It's not just like they're shutting everything off. Hope they're supposed to be tightening things up because we have a strong economy. So I don't think everything's going to fall apart, but I just see a repricing of assets happening at least for the first half of this year, I think.
Yeah, I like that. I like that. I tend to agree with that. Me and Kylie were actually just talking before this, like, and he was asking, like, how much more room is there? Because it seems like, and a lot of people think, like, oh, well, we've already corrected so much. Like, how much cheaper can stocks get? And it seems like a lot of stocks are kind of, this is just one, Amazon, for example, and maybe not even, definitely not the most affected by the correction. But a lot of stocks are in this kind of like June 20th. We looked at a few,
Right.
are in this kind of like June 20th pricing. So like a year and a half ago, and kind of like right as we were pumping money into the entire economy. And
Well,
so,
Nasdaq, or excuse me, Amazon's back to 3,200 now after
yeah, up here, kind
last
of,
week.
if you're up
So
here right now. So maybe now, not even so much,
no, but
uh,
yeah, but I get what you're saying. A lot of
but you could argue a lot of people are kind of maybe rushing to some of these bigger companies as like a safety play. Uh,
Yeah, well, Amazon actually had good earnings. So
and they
like
had good
any
earnings. Yeah.
company that's missed on earnings so far this year has gotten just absolutely destroyed. It happened with Netflix
Mhm.
first, then it happened with Facebook last week.
And
There's
it's not
been
even just
lots.
earnings, right?
There's
It's
been
like
lots of
if their forecast is like low, then people are like, oh yeah, fuck it,
right. That's what they're talking about. Yeah, their guidance on earnings basically like
guidance.
so. Yeah, when they've given weaker guidance, a lot of these companies
Hmm.
they've missed on their earnings and then given weaker guidance. So
Who
I don't know.
decides what the earnings should be?
It's a good question.
There's analysts on the street. It's not about what they should be. I mean, the company just is a calculation to determine what their earnings are, and then but there's also like all these analysts that work on Wall Street for banks and stuff that are constantly like trying to crunch the numbers of what they did last quarter and what their forecasted growth were, and then do they think they're going to beat do they think they're going to go faster or not as fast, and then analysts will come out with their own earnings estimates. um,
So when
it's
you
all a
say
guess. It's all a guess,
no,
literally.
no, when you say they missed their earnings for the
Oh,
quarter,
right.
who comes up with that number? Where's that number come from?
So there's the expectations, which is like the analysts'
Forecast.
expectations plus what the company had given guidance for, and then they come out with their when they actually report their numbers for that quarter based on their actual sales and expenses and all that stuff. Then if they miss that earnings number, because then it's a real number. Um, I disappeared again.
No, you're back. You're back.
I'm just kidding. um, I'm a magician, but yeah. So then they have real earnings, and then they miss if they didn't meet the guidance. Basically, that's how that's determined.
Yeah. Okay. And how do you think? Well, I want to get your guys' opinion on inflation, on how that is affecting this, and how that will affect, whether this. Well, it sounds like you don't think this is a real rally coming back, or a real turnaround, but how inflation is kind of playing into that. Because I'm going to go on a little bit of a rant here. What I think, what I've like, I'm trying to understand even like what inflation is, right? And it seems like basically that the prices of things are going up, right? And predominantly it was like things like goods first, and now like services have gone up, and they measure that in the CPI data every month, and we've seen that like 7 or more lately, and they even I don't I can't don't remember if they measure wages in CPI, but they measure wages either within CPI or separately. And wages are going up too, right? But they're not going up as fast as CPI. And so you could argue that the real wage growth is negative compared to inflation. Like even if I think wage growth is like 5% and inflation overall is like 7%. So you're actually losing 2%, and that's if your wage went up 5%. Like my wage didn't go up 5%. Only certain wages went up that much. And it's kind of even out of balance in a sense because, if certain goods that I buy go up, because of inflation, maybe I just don't buy those goods, or maybe I have to buy some of them. Maybe some of them are considered staples, and I need to, and my costs go up a little bit. But I can kind of maybe choose to not buy a car this year. I maybe don't really need it or whatever. But if my job, it either did or didn't pay me more. It's like most people have one jobs or maybe two sources of, most people have one source of income, right? Maybe some people have more, but so like you either did or didn't make more money. It's not like you can just like choose. Yeah, you can get a new job or something, but it just seems kind of like a yes or no type thing.
I think inflation is interesting how the government can kind of think that they can control how much businesses are going to charge for products, especially like with all the shipping constraints. So businesses kind of had to charge more. Do they think that businesses are going to lower their prices when those constraints are eased? Or that's what I'm wondering. Or if these prices are just going to stay super high, they're never going to come down. I'm just wondering about that. And then maybe if people stop buying those products, when they do come down, then maybe all those people that got raises during this whole process, are they going to start getting laid off? And that's a whole nother process of,
Yeah, and just to add on to what I was saying, it seems like that wages, like you were saying, wage raise lags, right? Like people only ask for more money. Companies don't just pay you more money. They pay you more when you ask for it, or when enough people ask for it, they decide like, okay, we're going to pay you more money. And that usually only happens when you need it, right? Like when you're like, oh shit, the cost of everything's going up. I need more money. I'm going to ask for more money. Companies will give you more money because they're making more money. They've charged for more goods, or they've charged more for whatever they're selling. And they can't. So it's like this vicious, and it's this vicious cycle. Like they pay you more and then they raise their prices because they need to keep their margin. And then, oh shit, like that sounds good. You stay with your job, you're getting paid more. Oh, but cost of goods have gone up. So I need to ask for more money. And then it's just like, it's like almost like what leads to like this hyperinflation, like a vicious cycle. And then even more exacerbated by like, the supply chain things that are going on, which is like, a lot of it kind of having to do with like boats getting here with all of this shit on it. Like just they literally cannot get the boats in here. And that seems like such a narrow bottleneck. It's like literally just the people that put the stuff on the boats like are just not doing it well enough, or like it just can't happen enough, or they get COVID. And then like you were saying, COVID has to do with it. Like China had a zero tolerance policy, or they called it a zero, I forget what it was called, but like basically they just weren't allowing anybody to have COVID, and if it did, they would just shut a whole port down. And a little bit like, maybe is that like just because they want to be super safe, or is that almost like, is that like a tactic because they don't need those goods shipped anywhere? Like, yeah, I know that they make money by shipping those goods out. They make a lot of money by selling us stuff, but like, could that in a sense be like a tactic to like kind of screw us over by like exacerbating our supply chain, knowing that they're a pivotal part of it, and knowing that we can't just like shift and make everything here in the States. We're all like just like that.
Yeah, it could be.
I think they're doing it because they don't want their people getting sick, and their zero tolerance thing or whatever. You see it with the Olympics too. The reporters and athletes are all like in isolation from the rest of the country, and I think by keeping cases down to or close to zero as possible, then they're able to keep all their factories up and running. Mm-hmm. So I think the zero tolerance thing actually keeps them moving more product. Okay, so and then I think the problem we have on our side is a lot of the receiving jobs with these shipping companies and the boats and all that stuff, there are a lot of union jobs. So it's not like you can just replace them easily. When someone gets sick, you need another person who's in that union or however it works exactly. And I think that's not as it's not available as easily as it would be if it wasn't union.
Yeah.
Well, if you were unvaccinated, didn't a bunch of people get like laid off?
In their union job.
Yeah, I think that's one of the
Yeah,
problems with all these
I know that's
shipping
happened with some
constraints.
companies, but I don't know how many or what the percentage is of that actually happening. You hear a lot of large numbers, but then all the companies I've seen that actually laid people off, it's been 1, 2, 3%. But I could be wrong. There could be more.
People are keeping their jobs, that's for sure. Or trying to.
Yeah.
It seems like having all the like you can't have a port in the United States that's not unionized, a union job, and I guess I get the idea of a union, but I don't know. It seems kind of like archaic and definitely not efficient and definitely not working in our country's favor right now, at least for the like supply chain problems that are happening. And I don't know, man. It seems like something has to be revised.
Yeah, I think unions are beneficial to people who don't work hard or are somewhat lazy. Um, there is some security in numbers, and I get that as well. But generally, if you're a really hard worker or you're really good at your job, I think unions keep you down. Don't let you make as much money as you should.
Hmm.
Yeah. Well, unions were a good thing when they were formed, like a lot of things, and they become more bureaucratic over time.
Mm-hmm.
There's a lot more people running these unions and
Mm-hmm.
a lot more money involved in the game now. But I mean, originally unions were formed because these people were making no money in
Right.
factories, and
Right.
so they just wanted like a honest wage, enough to support themselves. So yeah, I think it was a good thing, you know, and I
One
think it
time.
is a good thing still in some cases. But yeah, it's just become more bureaucratic.
Yeah.
Elon Musk openly talks about how he is totally like the reason he hasn't gone into like hasn't unionized his workers is because it totally just stifles his growth and his expansion. When he wants to do something, he wants to do it fast, and everything has to usually get run by the union. He said he'll be more than happy pay as much as unions are paying, take care of them, have like a zero asshole policy. Like he'll do whatever the like all the benefits of a union. He's more than happy to like acknowledge, but like just the fact that it takes so long, so bureaucratic, it takes so long to do anything, that he's like, that's just not how like my company like would run efficiently. Like it just would stifle all growth.
Yeah. A comment I was going to make earlier about inflation was just that the wage inflation is so sticky right now because there's a job shortage in this country, or not job shortage, but there's so many job openings, record job openings. So to fill them, they're offering
More
more money
money.
to people.
Yeah.
Also, because people are requiring more to work these days after COVID, they're just like, oh, if you want me to come in to a job, and actually show up to an office, it's going to cost you more to get me over there. So companies are having to give more perks and more incentives. So, in signing bonuses, whatever. Yeah. So it's wage inflation. And that's that's like the biggest factor in overall inflation, usually, is wage inflation.
Because it keeps that cycle just going.
Yeah. But
Okay, so
eventually, like Kylie said, you would think demand would, if things got too expensive, demand would start to ease, and then maybe people get laid off on the backside of that. But
yeah,
I
so
think
here's a,
we're pretty far from that.
Do you think we ever get to oversupply? Or do you think that's like do you think we're always going to be in this catch up and then we'll finally maybe catch up? Or do you think that there's ever going to be like an oversupply eventually?
I think there will be eventually. Yeah, there's got to be. Everything is like in cycles. So we're in a high demand time right now with not much supply, but I'm sure that the demand will normalize and supply. They'll have cranked up the supply chain to catch up, and yeah, and then
not only
that
that,
relationship will reverse.
not only that, but like this guy on the All In podcast just the other day that was like a supply chain shipping container expert was saying that a lot of companies, because of how bad the supply chain is, are having to, it went from like going about 50 days from like door to door from ordering something in China, getting it to wherever you needed it. And now it's like 110. So like doubled, and already 50 seems like a long time. 110, like a third of a year. So you're having to anticipate demand of your company now, like a third of the year in advance, which is like almost impossible to do. And with the thought that maybe it's gonna, you don't want to miss out on sales opportunity. A lot of companies are overbuying, over like purchasing, and yeah, which would, in turn eventually lead to an oversupply, specifically if, wages ever did come down and demand did come down. It's like you're just going to have all this stuff and nowhere to put it and no one to buy it.
Yeah, there is a retail inventories number that comes out as one of the economic numbers. Like, I don't know if you guys know, but like every day, or almost every day, economic numbers are released.
Hmm.
If you look up like Market Watch economic calendar, it'll show you, and like it's like the jobs report one day, another day will be like the Case Shiller housing index and other housing data. Then the following day will be the initial jobless claims and ADP numbers, and a lot of that stuff drives the market, and people don't even realize it. But almost every day there's some kind of reading on an index or whatever. Yeah, there you go.
Is it?
Yep.
President Mary Daly speaks.
You
Right.
feel
So
like
that was
the
last week. But yeah, that you can see this next week there's stuff that's going to be coming out.
I feel like the
Consumer
stock
credit.
market is always like searching for like anything negative, and then it'll just like tank off of that. Then crypto is looking for like anything positive, then it'll like skyrocket off of that. I'm just
Right.
like, which one do
So
I want to
funny.
be in? Like, it's
So
kind of
funny.
like I don't really have anything in crypto right now, um,
Yeah, CPI
but
on the 10th.
yeah, it's like so interesting. I'm like, what's the stock market taking for today? And it's like, oh, they found some type of weird news, and that doesn't even really affect the market too much, but I don't know.
Yeah, so we
kind
have
of,
CPI number this week, huh?
yeah, that's going to be big. I think the market's going to take a big dumperoni on that day. Who
I
knows?
mean,
I don't know. I don't know.
interest rates ended the week at like a yearly high, I
High.
think. Yeah. So that we could just be continuing higher this whole week. So we'll see. If it does, I would guess that the Nasdaq starts to puke it up again.
Okay, so we kind of talked about inflation and how like shitty it is, and obviously we've identified a problem. So talking about the solution, and it seems like the Fed has been very straightforward in how they're going to attempt to correct inflation, and that's by not putting as much money into the market and by raising rates. Like essentially the only thing they do, they stop putting money into the market, or they take the money that they already put out of the market and then they raise the rates, which leads to the borrowing, like increased borrowing rates on everything. So I'm just trying to understand, like Kylie was kind of talking about, how this leads to less inflation. So it like doesn't take money out of your pocket directly. It doesn't lower like your wage right away. It seems like it's going to take like a while for anything to actually happen once once rates are raised, once money is coming out of the market, and only once like people start feeling it enough where they say like, no, either I'm not going to buy it for that price or I can't buy it for that price, for a sustained enough period of time for enough people that companies are like, okay, we have to lower the price. We have to actually like lower it to meet some demand that actually makes sense. How long does that take?
I think.
23 days.
Yeah.
Or is that something just gets priced in? I don't know. Like, I don't understand. Because I guess I get how things get priced in and the market goes down, right? But the market isn't inflation. The market's just like a representation of our mood. It's like our emotion, right? Like,
Well, that's
when,
exactly. Yeah, I was gonna say. I think it's more of like what it psychologically does to the market. So
okay.
the Fed is constricting the money, and as you can see already, people's assets have come down in a lot of areas. Crypto
Yeah,
and stock market are probably the most obvious, but even the bond market is losing value, not as
sure.
fast as those two. So everything is contracting. So yeah, you're right. It's going to take time, but people who had a $2 million stock account, so they didn't really care. You know, they were
To
they
pay
were
more for
just
stuff?
they were just frivolously whatever. I'll buy this. I'll buy that. an extra 200 grand for this house, sure, whatever. It only cost me an extra 2,000 on my mortgage, no, a month, no problem.
Okay.
So it's like more frivolous spending. So now as things are getting smaller, people, I think psychologically, are like, oh well, my $2 million account is now only 1 million, or depending on what kind of stocks you're invested in. If you were
Yeah.
invested in Kathy Wood stocks and you bought it at the top when everybody was like, oh, stocks only go up,
Yeah.
and then you might be a little more hesitant in your spending already. So we'll see. There's a chance that the Fed is doing this and nothing's going to happen. People, I mean, in our area, the housing prices are still going up. There's still
Yeah,
record
people are
sales in
still
all these
making more
neighborhoods.
money. Not everyone has
Yeah,
$1 million in the stock market, and so they don't.
right,
It's not really always every. It's not every. But the common person is not like
right,
looking at their stock market, seeing whether they can afford things. It's just whether I'm getting paid enough and how much
right.
it costs. And
Hmm.
it seems like the increased rates or whatever they're using to combat inflation isn't going to really affect people's like perspective on buying expensive goods for for a while.
Right. Could be right. And that's why like inflation is a scary thing. And that's why the Fed usually takes it very seriously.
Hmm.
But I don't know. That's why a lot of people are upset that the Fed sat on their hands and they didn't start raising rates earlier, because
Hmm.
the housing market was getting ridiculous a year ago, or
Hmm.
six
Still.
months ago, let's say. So they they were, yeah. So they're
Hmm.
still buying mortgage bonds, I guess, which somehow it props up the assets of the mortgage-backed securities, which are all these home loans bundled up together. So I guess it makes it artificially, they're raising the price of those. So
Hmm.
maybe it's like propping up the housing market very slightly, but I don't know. You're right, Ashton. It'll be interesting to see if this slows it down by the end of the year, or if we're going into the end of the year this year and home prices are still making new highs, and then 2023 is the same, because that's going to get scary, because
Yeah.
then, yeah, because then you got to imagine like gas is going to be like $8 a gallon, $7 a gallon. Like you can already see at the grocery stores the cost of everything is already gone up.
Hmm.
I mean,
Hmm.
it's pretty noticeable. Everything I look at that costs like whatever, like $4 costs $5 now, which is a
Yeah.
25% increase. It's only a dollar, but yeah, everything is going up. So I'm really interested to see what will happen with that too.
Yeah, I'm just worried that like the ways that we like combat inflation don't really do anything for like a while. It's scary. You got someone laughing at you?
Yeah, my wife. I was about to just shame her and put her on the podcast.
Too mean. Too mean. Here's another thing. Do you think that like a recession,
Can you bring me cookies and milk, sweetie?
Oh my god.
Oh, I'm sorry, guys.
Yeah.
I'm
That's
sorry.
that's
Yeah.
that's definitely the intro. Do you think a recession could actually be like a good thing that ends up like weeding out, if that's what this leads to, whether it's at the end of this year or in 2023, that ends up like weeding out a bunch of like
Poor
overpriced
people.
overpriced baloney of companies that have like survived and just like really like you know puts the like iron in the fires or whatever, and just really like makes it so only companies that are making a profit that can withstand like lower prices, like
Right.
not these insane that will survive.
Peter Schiff is always harping on that. He's like recessions and bankruptcies, like it's part of a healthy market. Like
Yeah.
it allows the market to like weed out what businesses are inefficient and who
Yeah.
can't make money. And so if you're constantly just letting everybody have easy money, then all
Hmm.
these like shitty businesses are managing to just continue to take the free money, and their business, they may be scraping by, but it's not a truly like profitable
Solid
and
business
beneficial
model.
business for the economy. It's just kind of existing. So yeah, he always says like that recessions and bankruptcies are normal and good for the market, because yeah, it just kind of cleans things up a little bit.
But won't this also allow like big companies to grow even bigger because they're going to be, I guess, there's going to be fewer people with money, and then the big companies will be able to afford to, keep expanding and buying out smaller companies and offing their competition.
Yeah. Yeah,
Totally.
and I think that's why people love buying Apple and Amazon. I mean, Apple is like bigger than countries. I mean, their market cap is $3 trillion. I mean, they're not bigger than the US yet, but there may be a day 20, 30 years from now where they are, it's kind of crazy. They have, I think they have like $200 billion in cash just sitting there, Apple. They can buy basically any company they want in the world.
Kylie's a huge Apple bull.
They can't buy my company.
I was like the first stock I started buying.
Nice. Hopefully a long time ago.
Yeah, it was
a long time ago. My average is like ridiculous on that one, and I still buy it. But.
Yeah, that's the move.
I did want to say about that.
Go ahead.
I said I did want to touch on what you were saying about like the housing market. Because the one reason I think the housing, or pretty much main reason the housing market is just jumping up so much right now, is because there's just no inventory. So on every property, there's at least like 10 plus offers. So if just put me on the spot with this on the main screen. Yes, but there's like 10 plus offers. So it's like everybody, you have to offer way over list price to even like be accepted. You have to waive appraisal contingencies, guarantee a certain amount above appraisal, and it's just making the market go up so much. And now list prices are even like way higher than they should be. So a house, like a recent house that sold for $450, next house lists for $480, but then sells for $510, and it's just jumping up so much right now. But there's no inventory, so it's kind of like a battle that people have to play.
Yeah.
Not only inventory, but also supplies to build the houses. Lumber costs have gone up a ton, and just general supplies are taking longer to get to places, especially if they're being shipped in. So all of that factors in, and it doesn't seem like it's going to be getting better anytime too soon.
Yeah,
I
don't see a big influx of houses coming on the market anytime soon. I think they'll try to build a lot of houses, but I don't think that they're going to be able to build enough for like the demand. And then also like first time home buyers right now are just getting like destroyed. If you're at a lower price point, first time home buyer, it's going to be very tough to compete with like all these investors, just cash offers on properties that,
it's
pretty
crazy.
Tough. With new housing, when they sell new houses, do they list it for a price and that's what you buy it for? Or is it like, I don't know, auction style, basically like other, like a house that's already existing?
I would say it's somewhat more like auction style, I guess you would think, but they list the seller's realtor will come in, say what they think that the property would sell for. Sometimes they'll start off high, sometimes they'll start off real competitive. If they start off real competitive, they'll just be like a ton of offers immediately.
You said new house, right?
Or new house or resale?
For new houses, like when they build.
Oh, new house.
A community of like 400 houses or something. Does anyone know how the sales work on that? What?
There's just probably just a really lot of they just kind of price for how much it's going to cost to build them, how much they need to kind of make off profit, the area. A lot of it is the area, because they could build one house in a certain area of town and another house in a more luxurious part of town, and the lot premium in the more luxurious part will be $50,000 for the lot. In a different part of town, it'll be $5,000. So,
could you argue that the new build neighborhoods actually are like raising the prices of houses in the city even more so, because they come in, build, 40 something houses, whatever. They look around, they want to make top dollar. They're building houses so they can say they have supply issues, which I'm sure they do. They set a price, and literally whatever price they start at, it never goes down. It only goes up. And so it's like this, and it's this mark that other people look at, because, everyone's looking for resales and they look for the new neighborhoods. I mean, this is just what I did. And I look there and you're like, oh shit, like these are expensive ass houses. And now that's what you're comparing all these resales to. And so you're the thought of negotiating a resale house to something much lower is just like, it seems out of the question.
I almost feel like you could argue that brand new houses are underpriced. Because they're all selling, so there's demand for them.
They raise them like every month. They raise them like every month.
Well, I know what some housing communities, when they're new, the first ones to be sold are the cheapest because
Always.
there's not always a guarantee that the entire community is going to be built if it's being built in multiple phases or whatever it's called. Um, so you're kind of gambling that and hoping that all of them sell and then the next phase is built and so on. Um, I don't know.
You're also just like buying in a neighborhood that has construction, and it's usually like on the outskirts. Like it's just usually like a less developed area, so they charge you less, but then quickly ramp it up as soon as they realize they're selling.
Yeah, usually like every 3 to 5 sales, they'll do a price increase.
Oh wow.
Yeah.
Just
So I tell people if you get like in that phase one, you just keep on going down to the office and just like keep on checking. You'll notice like, oh, $10,000 this week in equity in my, haven't even moved into my house yet. And it's pretty cool. And then recently with COVID, I had people, their house went up over $100,000 while it was being built. And like even like the builder was offering to like buy them out like for like $50,000, $75,000. And it's like, this is insane. And they like called me right when they moved in. They're like, should we sell? Like we can make like $150,000 right now. It's like, if you want to, like it's, yeah. I mean, you're just going to have to, buy another house, but it's interesting.
It's like where are you going to go? Everything else costs more. It's not like you can find some deal for yourself. That's the problem with selling in this market. You got to be willing to like rent or move somewhere cheaper or it's hard.
Kylie, do you work in real estate?
Yeah.
Okay. Kind of sounded like it. I was just
duh.
We're a realtor here in Las Vegas.
Dadoy.
Call me if you need anything.
Yeah.
Never too busy for your referrals.
The one last thing on inflation I wanted to say is that I watched this Meet Kevin, who I think Jonathan and Kylie are familiar with, and he went back through like the history of like since they've been measuring inflation, so since they've been coming out with that data, and showed that every time inflation was over 5%, not only one time, but every single other time, which was about 10 times, it is followed by a recession. And the only time that it wasn't followed by a recession, and we're at 7% right now. So the only time it wasn't followed by a recession was after like the Korean War, after the Korean War, and we raised taxes really high and we put price caps on goods. And it pushed it down the road for like 2 years, and 2 years later we actually did have a recession. So it kind of just kicked the can down the road. Does that mean that we're for sure due for a recession?
Kind of seems we go to war with Korea and then push it off another 2 years. No, don't do that.
No, maybe that's the intro.
There's definitely going to be a recession on the back end of this. There's always a recession.
It seems like there has to be.
It seems like a business cycle. Things go up, and there's always recessions. You just hope that it doesn't turn into a depression or the Great Recession or whatever they called the last one. But it's like it's just part of the business cycle that it will happen. But it's this tough pill to swallow that no one wants to really like accept, right? Everyone's like, well, maybe the Fed is like an election year. It's election cycle, so maybe they won't. Like I've heard people say this, like it's like a midterm election. Maybe they're going to be like more lenient, and like everyone's just like making these excuses when it seems like we just have to like accept that. Like, we just fucking did this, and look at the last 2 years. It seems like we're bound to have like the equal but opposite. Like we've been printing money for over a decade, basically.
Yeah, that's all we do,
and expanding the money supply, and so obviously, and then in the last year, then with the amount that we did, it was so not in the last year, but whenever that was, 2020 / half of 2021, it was ridiculous. I think they pumped $7 trillion into the system between the government and the Fed. I mean, they had never even done like I think QE, the first QE when they started. I think I remember hearing this was like. It wasn't
even $1 trillion.
It was like 200. It was like $200 billion.
Yeah.
And then in COVID happens, and they do 3 trillion from the federal government and 4 trillion from the Fed. So who knows what the implications of this are and how far out into the future. Like Ashton said, maybe this inflation is going to go on for a while. Maybe it does get really bad. I mean, I hope not, but but things really are still crazy. Like I was just thinking like as a kid, like I mean, granted, I wasn't like in on everybody's investment, but it seemed like it was harder to buy a piece of property. Like, uh, oh God, oh no,
Everyone gets nervous.
it just makes it obvious just how bad you look. You know what
I'll stop that.
I
How
mean?
many wummies you've taken?
How many
exactly.
wummies?
How many tokes? Oh God, what was I saying? Oh, I was
When
saying
you were a
like,
kid.
yeah. So like, it just seems like everybody has money now for investments. I
Mhm.
don't know. It seems like everybody
Everyone's
is
talking to you about
investing, and
investing.
yeah, it's like, oh, they invest in real estate or they invest in stocks. Like everybody is investing, and I
When you
I
were a
know
kid, it was just like people that you knew that were in investment, like in
like
the
I didn't know.
investments.
Yeah, I didn't know many people that. So like just to think of like middle school. So our parents, when we were in middle school, most of our parents were in like their mid 40s, let's say. But
Okay.
like now it seems like everybody our age are like 30, 35 years old. They're like, "Oh yeah, I own a rental property here," or I'm looking for this real estate investment, or I'm in that investment. It's like it does seem like everybody
Money.
has some money for investing these days,
They
I
do.
think that's mainly people in your circle or in this area. I still think there's plenty of people who don't have money to invest or haven't invested yet.
Yeah,
To
maybe
me,
you're right. I'm just saying, like, just yeah, from my perspective, what I remember from being a kid and now. But you're probably right.
I think you're both right. I think there's plenty of people that don't have investments and whatever, but overall, there's a lot more people that do. And like we were talking about last week, like savings are actually down, but people's overall, like everybody's personal balance sheet, everybody's personal checking account is a lot higher than it was 2 years ago. It just is. Like it'll last until they burn through it.
and I think we're at the age where we're making more money. Um, Especially a lot of our parents where we grew up in good conditions and benefited from that. So we have the opportunity to make more money than our parents and probably our parents' friends, and except for some of your parents' friends first,
Some of your parents'
specifically.
friends too, dude.
A
Don't
good
talk.
point.
Yeah.
So yeah, I don't know. I mean, to me, even this investing thing is pretty new to me. I mean, I've only been doing it a year and a half ish.
Yeah. Well,
Before
that's
that, there
like a
was
lot
no
of people.
chance.
Right. No. Yeah, but that's what I'm saying. Like in the last like two years, like specifically since COVID, like everybody's got extra money, for something. Whether they were
Yeah.
buying a few $100s of
Dogecoin.
crypto with it. Yeah, we went to Vegas and the table limits in Vegas were like
$20.
it was like literally $50 blackjack, like every table, and it was hilarious because my cousin was bragging because he lives in Israel and he got a $600 like relief check from Biden or whatever. This was like a few months ago, and he's
Okay.
bragging about it. And I'm going, yeah, that's why the tables are $50 is they know everybody's coming here with $600. Everybody
Yeah.
got that same check
Yeah.
that you did, buddy. So it's like, of course the tables are 50 because they can charge that.
Louis Vuitton priced bags the exact amount of the checks. Like they priced them the exact amount of the unemployment checks.
Yeah,
Really.
'cause then people
Yeah.
just think like, oh, this is
There's
free.
like, oh shit,
Like,
this is just like a wash.
yeah.
Right. And I mean, that's what they were for, technically. The stimulus checks, they wanted you to go out and spend that
Spend.
money.
Yeah, so they did the right
But,
thing.
but yeah, but it's just interesting. What do we got here? What are we looking at? Bitcoin?
Bitcoin.
Oh man,
Uh,
that's ugly chart. That thing might die a horrible
Yeah, I
death.
think it's dying. I
to
think
me,
it's momentum down.
to me, it looks like we're like right here, over here. Like we made this little like, bleh, and we're about to
Yeah,
just.
I don't know.
I don't know.
20K looks fun. Let's get there.
Yeah, I
It's
would
Go
had
love
a
to.
show
good week though. It's
go
up.
show any Kathy Woodstock and then pair it with the Bitcoin chart, and I bet see the momentum just like fall out.
Yeah. Oh shit.
Yeah.
I mean, it's up about 6,000 on the week.
No, it's having a good week.
Yeah,
Yeah,
it's having a great week. I think it's a bunch of
But honestly, Ashton
malarkey.
Ashton was
that cat
Ashton
bounce.
was onto something. He told me the other week. He said that Bitcoin was a leader, and since he said that, he's been right once, so we'll see. I'd like to think he's right forever, but
What do you mean
yeah.
by that?
So like Bitcoin, just a leader for general markets, like Bitcoin went down and then stocks kind of crashed afterwards, and Bitcoin went up last week, and then stocks kind of followed and had a up week. So
Kind
I
of
don't
like it
know.
feels like it's like one of the earliest predictors because like the people that invest in Bitcoin are kind of like they're just like you were saying, Kylie. They're just like so ready to like either make it work or take their money out, either want it to work or take their money out, and so they're just like they're the first responders to all the changes in the market. We'll see.
Yeah, I
I feel
also
like
think it's the
crypto is
most
just like
it's the
such
most
like a
leveraged.
And yeah, exactly.
yeah.
So when people need money, that's the first place they take it out. When they have extra money and they want to make fast gains, they think about Bitcoin or crypto or whatever.
Is that something you guys do with cryptocurrency? You leverage it?
I've played around with it,
Ashton
but
does.
not really, not like not to a significant degree. And all my leverage trades have gone bad. Like I want to short it like when it's getting close to here, but I like all my shorts have been shit, so I don't even know.
I would go with that short. That looks good.
I've
Yeah.
been doubling down and selling, continually selling everything,
Yeah, it's not a bad idea.
but it keeps going up, so it scares me.
Yeah, I get you.
I think crypto is the first to sell off because it's so easy. You don't have to worry about any wash sells. So I
Right.
just feel like it's like a bunch. You're just like I feel like crypto like it's like a slot machine, and if you're in a bunch of coins, it's like I'm gonna play in multiple slot machines at once. If I want to get out of one, I'll just get out.
Yeah.
Yeah, it just doesn't.
We broke.
There's just it seems like it's all off of like hype and momentum. There's not really much going on right now with it.
Mm-hmm.
Like when it comes to
Yeah,
like regulation or anything like that.
I feel the same. I feel like people in this area are more willing to gamble than other investments.
Yeah.
I'm super hesitant to. I love cryptocurrency and the whole idea, but I'm like, I'm not putting any extra money in crypto right now. There's no way.
I saw something recently about quantum computing and how it's going to be able to break the Bitcoin. I don't even know what you call it, the system behind Bitcoin in the
Yeah.
next 10 years.
Yeah, that's a common
possible.
argument. It's a common argument. There are some counter arguments, and I'm not sophisticated or eloquent enough to relay them, so I'm not going to try. All right.
Next.
Yeah, next. Well, and that I guess in this like climate, like then what do you put? Where do you put capital? Do you try to just is it best to just save in cash? Are there things like value plays and commodities and dividend stocks that make sense in the short term or even during a recession that seems like the smart play, or is it better to just wait until the whole market seems to figure its shit out and then get back on the overall up and right train?
Jonathan.
I'll defer
Where do
to
we put our
anybody.
money, bro?
I'll defer. I mean,
God.
basically, yeah. What do we do? Not financial advice.
Like,
Right.
do I buy stocks? Do I sell
This
my
is not
stocks?
financial
Like,
advice.
I want to go all
No.
in and make 100% in one day.
Yeah, I know. You only got to do that on your AMC. That's it.
Yeah, I got definitely made well out on that.
Yeah, too
I
bad.
would have
Too
held
bad
it
some,
though.
too bad. I was about to say, too bad some dickhead told you should get out at 11 or whatever.
No, it was a good trade. I think I bought it. I started buying it at like $3, averaged
Yeah.
at like 5, sold it at like 12.
Yeah, you can't be
Hey,
disappointed
there
about
you
that.
go.
Then it went to 40, but we don't want to add up what we
Right.
would have made, right?
Yeah, you can't do that.
No.
Never.
Yeah.
That,
So
I mean, that's like the same. Real quick, that's like the same thing. Like people that bought Bitcoin at 100, like, and it goes to whatever. Like you can't count those gains. Like you would have had to be like an idiot to not sell multiple times. Like you would be stupid. So it's like, unless you forgot about it. So like to count like 40, like it's just not a good idea to play that game.
Yeah. If you didn't sell Bitcoin when it hit 10,000 that first time, you should probably question your investing. Like,
right.
It's like that one guy who held on to Shiba Inu and made like $7 billion or something outrageous.
Yeah, exactly.
Genius. Yeah, I don't know where to put your money, guys. I think I think you should stick with a safe approach for now.
I've been moving it all
Until the
into
Feds
US dollar coin.
until the Fed's path is a little clearer. I think you want to save a little cash, have a little cash on the side to deploy, and when we get ugly days, I think you buy good tech companies because tech is the future. So I think you can put a little bit of money into you know areas of the market you believe in, like cybersecurity or semiconductors.
Mm-hmm.
Um, I'm not too high on like social media tech. I just
Mm-hmm.
think that
What about fintech?
their best days are over. I like fintech, but they're trading like shit, so it's a little scary. But yeah, I mean, if you don't, if you like a SoFi or PayPal,
PayPal? What's PayPal at right now?
they're super beat up, and they're worth a small investment, and if it goes down, you can get a little more as long as the stories don't change and their businesses aren't going to shit. But yeah, I think you can. There's good investments in the market. You just have to put your money in smart places. Don't go for companies that are trading at 50 times revenues.
And don't go
Or
all in.
100 times revenues right now. Look for something of decent value out there. But
Uh,
also, I mean, real estate has been probably the best investment. I mean, just goes up every day. It's so crazy. It really is. I've been watching the real estate
Dude,
prices around here for like a year and a half just in the area, and it's amazing. It's like never it's just relentless. There's very little inventory. Last year actually was like the most turnover. There was a lot of homes for sale, but there were buyers. Everything was getting bought up. But this year there's just less homes for sale and the
Still
prices,
buyers, no
yeah, still
sellers.
buyers and the prices are going higher, and it's really crazy. It is. It's a little bit scary, but
you kind of touched on it earlier when you said how it's like good for there to be like cycles where people like kind of go through bankruptcies and things like
Mm-hmm.
that. And I
Mm-hmm.
feel like they stopped that with like all the COVID and the
Totally.
forbearance type stuff,
yeah,
and they
exactly.
really stopped that. Even if people weren't in a bad situation because of COVID, they could have said that. And they got a huge break, and it was good for people. I don't want to say it was a bad thing for people to like do better for themselves and have some type of like outlet. Uh, but yeah, I think that definitely put a halt on or kind of like catapulted the market, I guess you would say.
So
yeah,
I guess
Yeah.
yeah, go ahead. Go ahead, Ken.
yeah. When COVID happened, we were looking to buy our first house, and that all started. And my expectation was, there's gonna be a lot of foreclosures. The market would eventually start going down, and it'd be great for someone like me who's a first-time buyer. So we waited a little bit and saw all these protections they put in place, which I get is a good thing, for those people if you have emotions. But someone who didn't have much of a soul like me just wanted people to suffer, so my price would go down and make it easier on myself. But that did not happen.
Yeah.
Yeah.
So yeah, like you were saying, like with a recession kind of weeding out, or like we were talking about reading out some of the shit companies, maybe taking some of the fluff out of the market. But like Jonathan was saying, the real estate market seems to be pretty resilient. Not that we've seen some market correction, but not that we've seen the worst of it. I don't think. How does a recession? I'll ask Kylie, I guess first. Like, how did you think a recession will treat the real estate market? I wanted to know like what would actually happen if home rates went up to like 6 or 7%. What do you think would happen? And would there ever be a case again, like I guess in previous like corrections, recessions, where we would get like people losing their homes, having to sell their homes traumatically like that, or get foreclosed on? Do you think that's like a similar situation we could find ourselves in? Do you think? I know the
I
loans that we were giving out before aren't close to like the loans we were now, but
it's so hard to say. I think for anything to happen, I think there would have to be a lot of people would have to lose their jobs. A lot of people would have to get bad advice and stop paying their mortgage and just get foreclosed on, because everybody right now has a ton of equity in their home.
mm-hmm.
So
even new buyers.
It's out of go rent for a while. Do what I needed to do.
Your dial-up modem broke. What did you say?
I think it froze for a little bit.
Yeah, you did.
They
But
would have to lose their jobs.
yeah, there just needs to be a huge influx of homes that just start getting listed on the market. But until then, I just don't really see prices coming down that much. Even if interest rates go up, if there are just not any homes on the market and buyers are still having bidding wars on homes, I just don't see it coming down. But if
You
there
think it
is
could,
more homes, then and interest rates go up and buyers have more to choose from, and people get a little bit more picky. But until that happens, it's still bidding wars.
Yeah. It does seem pretty safe. It does seem like real estate is a little bit like I don't know, isolated or like secured from even like a possible recession. I don't know.
It's like almost what if like the government would have put a stop on the stock market, like, hey, if anybody's been affected because the stock market went down during COVID, like, just let us know. We'll readjust all your buy-ins and we'll help you out.
Right.
But like, it's kind of like what happened. Like,
Jesus.
but
All right. So maybe
it is better with
cash and
housing,
maybe cash and real estate. That's good to hear. I was starting to worry that I bought 2 houses at the top of the market. This is a bad idea.
No.
Oh, it's very possible.
I'm sure it is, but they're long-term plays for me. I think if you have a pretty long-term view, if you think in 5 or 10 years, I don't think even a bad recession would last that long. So hopefully not.
Anybody that bought a house after 2008 bought their house at the top of the market. So,
You're
Right, I
no
guess
matter
what
what,
you're
you're
saying.
always buying your house at the top of the market.
yeah.
Right.
Well,
Technically,
you
it's
can
fine,
get
man.
like a wedge deal. If you're getting a really good deal on your house, then you're not buying at the top of the market. But I get what you're saying. All right. Well, I guess the next topic I wanted to talk about, our NFT and crypto guru is not here, but we have Jonathan. He's also in the NFT game. Tell us about your NFT. Your NFT. Okay, are you allowed to talk about it? Is your project coming along?
I mean, it's coming along.
Tell me about it.
I'm waiting on my artist to
Finish
finalize some things.
Nice.
But yeah,
Give us the general idea real quick. I think I've heard about it, but I don't know if everyone has.
the general idea is to
What kind of art is
drop
it?
it's digital art of
Mhm.
cars.
Cars.
Yeah, and so it's
Like-
going to be a car NFT, and then there'll be some kind of a value attached to that NFT, which
Okay.
is undecided right now, and
Mhm.
hopefully build some kind of car community that I'd like to start as a localized thing, mainly like Southern California,
That's cool.
and then maybe extend outward from that. So yeah, it's just still in the beginning phase. Probably going to put together a real business plan.
hmm
But yeah, I'm just waiting on the artist to finalize
Some
a
things.
couple of things, and then I should be dropping them, and you guys can hear more.
Nice.
But
Nice.
yeah, just kind of an experiment. I mean,
Totally.
not expecting a home run out of this, but just a good learning experience. And
Right. That's the best way.
Yeah.
It's good. The car community has always been kind of like a community in itself, like a tech community. You could even there's always been even like car meetups. Like people for a while have been doing like they have their Sunday cars. They meet at like whatever. They open their hoods and they just like drink. It's like a tailgate party with like your fancy car or whatever.
Sure.
It's interesting. Yeah, I like that idea.
When I used to go to the beach all the time, there was a car club, a very nice one that would show up. I don't know what the restaurant's called now, but the one right on Free Zuma or Zuma Beach, the Gray Whale or something like that.
Mhm.
They would always meet in that parking lot every Sunday morning, and the cars would range from like $100,000 to $500,000 cars.
Mhm.
They were just million Ferraris and those crazy Mercedes and all those different things. So that would be that's a car club you can go make a stop at and get them involved.
Yeah,
those are
that's a good idea, Kean.
yeah. Anybody who's willing to spend $100,000 on a car can come to my club.
Anyone who's willing to spend $100,000 on a car can spend $1,000 on an NFT.
Exactly.
Yeah, especially if it looks like their car. something like
Right.
that. There's a lot of things you could do there. I think like even reaching out to currently established car clubs and like seeing what they would be interested in, or giving away things to them, or just trying to make it like, you know, it's kind of a similar thing in a sense. So I like
Yeah.
it.
Yeah. So I'll elaborate more
Or
in the
even like
future.
dealerships when they sell a car, they could sell a car with an NFT. Be
Right.
like, hey, you buy this car, it comes with an NFT, shows that it's one of 500 Rolls
Right.
Royces that were sold in
Right.
2022, and
Yeah.
One of 17 million Corollas.
Yeah. Obviously that would be like,
yeah, right. Even if you get one with a Corolla, it'd just be cool to freaking have one. And I was even thinking like you're probably gonna see like suckers at the store.
suckers. Plenty of suckers. All right, cool. We'll ask Andrew about his NFTs when he gets on later. I've been holding off on that. I don't know. I got a few NFTs, and it's like I said, with crypto and everything the way it is, I feel like it's one of the first. It seems like a bubble to me right now, so I like the idea of making them, not so much buying them.
Me too.
Yeah, I know.
I
you
mean,
do.
I don't know. I mean, listen, if you find a deal out there, or one that seems like a deal, go
It
for
offers
it.
real
But,
life value.
yeah, but I think that's what you got to look for. So
Yeah, yeah,
otherwise,
Currently, I'm-
otherwise you get it too late. I feel like, you know.
yeah. Totally. Yeah. All right. Well, we're coming up on an hour. The last thing I wanted to talk about was a little philosophy, a little philosophical.
Nope, I'm
And okay, here's what I've been thinking about. Just like today in the sauna is where I do most of my philosophizing. So
And other stuff.
in hand.
yeah, it's just a bunch of dudes, you know. Like basically, I've been getting over this like shoulder injury, and I've used it as a way to like reinvigorate, kind of like getting in shape and like doing these other types of things that I haven't been doing, and just like organizing my life and whatever. It was hard. Like it was actually like way more difficult to get injured again than I thought it would be and have surgery. And I'm sure as I get older, it just gets harder or whatever. But it seems like every hard thing I go through, whether that's an injury, whether that's like an
When you
accident
broke your
that
penis?
no just for the record, I do not have a broken penis. Like when I got in that bad car accident, I mean, I feel like I've had my fair share of rough patches, but every single one of them I've come out better, and I feel like I've changed for the best, and in a way that maybe I wouldn't have otherwise. And it made me think like, and I know it sounds silly, but like, should I or people be like seeking out these difficult situations? And obviously you shouldn't seek out to get injured or something like that, but like, should you be placing yourself in controlled, hard, very difficult situations? Because those are like the things that really like test your fortitude, or that make you actually grow, that in a way that you can't get better just by being comfortable.
I think those times in your life spur innovation. You have to be innovative when you are struggling or something major happens. I mean, I know First lost his job at one point, and it seems like that created, an opportunity for him to look for a new job, which seems to be much better for him. A lot of times, when you're comfortable, people are comfortable being comfortable. They don't want to be in those situations, but then when they're forced to be in it, it allows them to, come up with new ideas or new possibilities that generally, after some hard work, can be very beneficial.
Yeah, no, I agree.
One thing that I've noticed since I've had kids is
There you go.
put like my daughter through like super stressful situations all the time, whether it be like when they're super young, just like belly time. Then you like trying to teach them how to walk, and then just like just a bunch of things. Like you're always just like really
Pushing
putting them
them.
through a lot of stressful situations. And then as adults, a lot of people like really try to find comfort and stay in like a super comfort zone. And then that's why I do like jujitsu and things like that to like physically and mentally push myself. Things, but yeah, I feel like as adults, you try to find like comfort zones, and
Yeah.
then like we put so much pressure on our kids to like get out of their comfort zone, and it's like
Meanwhile,
Yeah,
Just
meanwhile,
Because we've done it already.
I see like parents in jujitsu that don't. The parent doesn't do jujitsu, but they're like putting their kids in competition. It's like you don't even know what they're going through. Like, how can you even like, and like yelling at them like you need to try harder, like, bro.
yeah,
like,
yeah.
like,
you
let
need to try
someone stand on
harder.
top of you, like, let me mount
Yeah.
you and see
Well,
if
yeah.
tell you to try harder. Like, yeah, it's like it's crazy, you know, like, yeah, comfort
Well, like
zone.
Kean
That's-
said, I feel like a lot of people or adults maybe have the perspective like I already did that. I've gone through my
Yes.
time. But like, is there really an end to that? Like, why should you stop growing? Why should you stop trying to like be better? Or is it just that you found a level of comfort that you're okay with, and so at that point you're not you don't really need to. You feel like you don't really need to grow anymore because you found comfort.
Well, there's always some risk in those situations. So it's not a guarantee you're going to have a better idea or be put in a better situation by going through a hardship.
Sure.
So there is some risk involved. And I think the older you get, the less
More risk
risky you
averse.
are.
Definitely.
But I think this is also another reason people stay in relationships too long, because even if the relationship kind of sucks, they're comfortable in it, and they rather be with someone and have that companionship instead of going through the tough times of breaking up, finding someone who might be a better fit for you.
Or to add on to that, like even within your relationship, maybe like I know with like me and Katina work on this, and just like we're talking about it in a therapy session, like having uncomfortable conversations is like, it's hard. It's uncomfortable. They're not like, you actually like tend to just avoid them, and you find other workarounds, or maybe you just like feel like, oh, I can just like deal with it or whatever. It's not that big of a deal. But like really, it would be, your life might be overall better if you just had that conversation, and maybe you were misinterpreting it or whatever. But like we just like tend to not, because we'd rather just not be uncomfortable.
Yeah, you don't want to go through that short period of discomfort, which is
Right.
the conversation or whatever the situation
Whatever it is, yeah.
I feel like with relationships, that if you take like 100% ownership of how like the other person's feeling,
Mhm.
then it kind of like oh, they're feeling that way because of me, or like something like that. Then it's like, oh man, like maybe I could make them feel better or something. Or I don't know.
Yeah. There's a lot to be said to like
definitely
kind of
hard. But, yeah.
putting yourself in their shoes, and yeah, but definitely the hardest thing I've ever done. I haven't had kids yet though.
Yeah.
Well,
Making them is the easy part
making them the
Yeah.
easy part.
that you've been practicing your whole life for, dude. What are you
Can I
talking
just
about?
make them? I think I'm just gonna make them. Make them only.
You can sell them.
Yeah, like NFTs. We should make baby NFTs that come with a baby, and I'll be your
There
guy.
you go.
I'll be your artist.
Yeah, there you go. You're just making babies in the real world.
Just making babies.
I'll be your artist.
All right, guys. Well, does anyone have any final words?
We should name this one Milk and Cookies.
Cinnamon.
Cinnamon.
First, you gonna take us home?
Yeah. Keep your heads down in the market this week, and
Give me an Ariba.
Ándale, arriba, arriba.